Hello and welcome to another edition of Stock Watch. So as we get to the back end of the trading week, we hear that Goldman Sachs are back in the headlines after their apparent inhumane and abusive working conditions for first-year bankers. So they've warned that they will start quitting or walking out in droves at certain times if they do not stop working over 100 hours per week. And some have maintained that they want in their contracts an 80-hour cap on their weekly working conditions. So as I said, I've reported this before in previous Stockwatch videos, but obviously nothing seems to have changed as the news is still in the headlines and it keeps recurring. The bank said it has reinforced its Saturday exception policy and moving to automate certain tasks for junior staff. But as I said before, we'll see if that comes into light as we go into the second quarter of the year. And also JP Morgan Chase is currently actually planning for summer staff to go back into the office, and this is just a small test to see if it can cope with obviously having social distancing, first of all, having no more than 50% of its staff in the office at one time, but obviously to see if it can actually work. The plan is to bring back in-person internships in June rather than July, and another sign that the corporate giant is believed a version of the pre-pandemic working life is near. So usually when one bank does something, the other banks start following. So we'll have to wait and see if this comes into light and into fruition as we get into the second quarter of the year. So, Goldman Sachs spokeswoman Nicole Sharp has said, we recognize that our people are very busy because business is strong and volumes are at historic levels, which is true. But a year into the COVID, people are understandably quite stretched, and that's why we are listening to their concerns and taking multiple steps to address them. But as I said before, this has been in the news before, so we'll have to wait and see if anything comes to light because of it. So, Goldman Sachs, as I said, reported net revenues of nearly, over $40 billion for 2020, even though there was supposed to be an economic downturn. So they've bounced back very, very well. As you can see here, it's managed to stay above the $130 weekly range, and it's propelled over $200 in that 52-week period. So that is a very good sign that the banking giant is heading in one direction. And at the moment, it's overweight, which is a moderate buy. We'll see if that's going to keep on shifting to an actual analyst rating buy. But it does look very bid for the time being, so I'll be looking to put in some buy positions on it. We'll look at the chart shortly though, just to confirm. And also JP Morgan Chase as well, their 1 monthly period, they've steadily increased, going over the $150 region. And as I said, their 52-week range was pretty much halved, but obviously not so detrimental than other banks. So we'll see how that comes into light as well. And at the moment, we've got a slight overweight, which is a moderate buy as well for the company. So again, we'll wait and see how that's going to pan out in the next few trading weeks. When I last looked on Goldman Sachs on the chart, we had this not detrimental, we had like a slight downturn before we had the Pfizer vaccination update on the 9th of November. But as you can see then, there's just been such a prominent move to the upside. We had a slight dip here, which has brought a slight bearish divergence. But I'll be seeing if that's going to come into fruition, because at the moment the bias is firmly on the upside. I'll just zoom in like I usually do for the areas of interest. As you can see, trading very far away from the Ichimoku cloud, a very good sign that the impetus is on the upside. So a very good bid. If we do start getting a bit of a relaxation, let's say, on momentum, then I'll be looking to see if it's going to reach this first peak here, roughly about the $310 area. If we do start seeing prices move down, then I'll probably be putting probably a sell position roughly about this area and see if prices can move down between these areas here, roughly about a $40 range. So something to look out for in the next few trading weeks. And with JP Morgan as well, same scenario pretty much with most of the banks. We had this slight dip, but the accentuation to the upside. So now I'm going to be looking to see if prices will start picking up again, as the RSI on JP Morgan is a little bit different to Goldman Sachs. We're not seeing much of a bearish divergence here. It's pretty much overbought on both areas. So it's a little bit less things to worry about on this chart. And again, if we do start seeing prices start waning, then the first point I'll be looking at is the recent peak and the recent dip. So roughly, again, we're looking at probably about a $20 range there-ish. And I'll be looking to see if I can put any sell positions in to just capitalize on some small profits I'm not looking at many big swings in the market at the moment for the banks, unless some detrimental headlines come in. Obviously, we've seen some global headlines about the pandemic antidotes not being able to be distributed. There's been some scarce rejections from countries. The UK is blaming China about not releasing vaccinations to the rest of the world. So we'll have to wait and see if that comes into fruition. Obviously, we've seen oil as well slumping quite a lot yesterday, up to over $5. So we'll see if that's got any effect on global stocks as well as we go into the second quarter. But just certain things to look out for in the next few trading sessions. So that's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or queries, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.